Awesome. Fine. We were at determining the profit and loss account, and we have already posted the freight charges. Now we are moving on to purchases and sales. Like I had mentioned, even though those are real accounts, we still post it in the profit and loss account because those are the exceptions. Sales. Let's come to purchase first. Is it an income? Is it an expense?
Expense.
Awesome. Now I'm putting it as two purchases. Amount is 185. Sales is income or expense?
Income.
I'll put it as buy sales. So you can see every time we are entering in the credit side, whichever statement it is, whichever account is, whether it's a ledger, whether it's a profit and loss account, we always use buy. And in the debit side, we always use to. This will not apply in balance sheet. In balance sheet, we do not use to or buy. Just the name of the account, nothing else. Only till profit and loss account. If the entry is in the debit side, it will be to. If it is in the credit side, it will be buy. Simple, very simple thing you can remember. Now, then what we do is we do the balancing in the same way that we close a ledger. Can somebody repeat what we do in the balancing part of the ledger? First step is
Higher side.
higher side. Here, no, the first step is to find the higher side. And the higher side here is, if you can see, this is nothing but 186. This is 200,000. So definitely the credit side is higher. Then what we do?
Then we balance it.
We put that higher total in both the sides. Very simple. Let's put the higher side in both the sides. Then what we do? We find the balancing figure. Balancing figure in the lower side, which is this minus, sorry, minus this. This is nothing but your profit or loss. $13,500 to be calculated in the profit and loss account. Can somebody tell me, is it a profit? Is it a loss?
It's a loss.
Okay. Who said profit? Who said loss? And if we loss, why loss? If profit, why profit?
Debit side is higher, so I think it's expense is more.
Okay. Which side is the expense side? Debit side, right?
Yeah.
Is the debit side higher? Really?
No. Fine. Yeah.
Yes.
I got it.
Everyone got it, right? It's very simple. This side is the income side. This side is the income side. This side is the expense side. So if this side is higher, it's definitely income. That means whichever side you are putting it in, the other side is higher. It's as simple as that. So we will do it as net income, which is 13,500. It's clear, right? Pretty much.
One debit side is the expenses side, right? And
yes.
Credit side is the income side.
Yes.
Okay.
Yeah. Now, in the logic of balancing, if you remember, I'm just trying to link two things. Whenever we were actually calculating the cash, if you remember, here debit side is higher than the credit side. When we are calculating the balance was coming the other side. Then to determine the balance, then we were taking it to the other side. Here, same thing is happening. However, that transferring to the other side is not done. In the profit and loss account, the only difference between ledger and the ledger is we are calculating the differential amount. That means the credit side is higher. Had it been a ledger, we would have posted it to this side now. However, we will not do that. Instead, what we will do is we will take this net income to balance sheet. Can somebody remind me, why do we take the net income to balance sheet? I think we had a big discussion about it.
Wealth.
Yes, because income is a part of wealth. And when we are calculating the wealth through balance sheet, then that should be also included. It's as simple as that. Now, if you remember, net income comes in which side and net loss comes in which side? When I say which side, asset side or liability side? Net income is liability or asset?
Liability.
We also had a big, yes. And the reason for that is?
You owe people money.
Yes, when the moment the company earns certain amount of money, net income, then it owes that much of money to the owners. That means that's a liability. And if it is a loss, then the logic was, if they owed 100 rupees yesterday, because of the loss, they will owe little less. Suppose 20 rupees loss they made, then they owe 80 rupees only. So because that amount is getting reduced, so it's actually acting as an asset. So that will be an asset. Very simple as that. Let me introduce one more concept, which is of trading account and profit and loss account. Now, whatever we did in the profit and loss account, same thing is done even when we do the trading account. The only difference is we divide the profit and loss account into two parts. I would say this is the trading and profit and loss account. I'm just changing the name because I'm introducing this concept. We will do exactly same concept. The only difference I'm saying is we are just dividing the whole statement that we prepared into two parts. One part will be trading account. One part will be profit and loss account. If I ask you, let's do one thing. Let's balance for whatever we calculated here. Okay. If we do that, how will you do? The first step is to find out the higher side. Higher side is definitely the credit side. Then the next step is to put the total of that higher side in both the sides. So that is 200,000 I'm putting in both the sides. Once I do that, then what I ask is balance it. This part only, balance this part. If we balance it, then this in the debit side, I'll have to put in the balancing figure. In balancing figure, it's coming as 15,000. So what I'll do is I'll name it as something like this, to gross profit. I'll introduce the concept a little bit after that, but I'm just showing you how it is making no difference. We are just segregating two statements, one statement into two parts. If we do it as gross profit, we have done it. Similar concept to the ledger when we were actually balancing the ledger. We were calculating the carried down, then we are transferring to the brought down. Here also do the same thing. Gross profit is coming the debit side. Now put it in the other side, which is by gross profit.
Okay.
Now, once we have done that, let's put in the amount as well, which is 15,000. Now, forget about the trading account. So this is the trading account what I did. I'll explain a little bit more about it. Just see how we're just segregating a statement. We are doing nothing else. Now we have put the gross profit here. We have already the freight charges here. Now try to balance only the profit and loss account. Here, which side is higher? Let's forget about this one. We haven't calculated the net income yet. Now let's find out the higher side. Higher side is the credit side, right? That is 15,000 instead of 200,000. So I'll put that 15,000 in both the sides. Then I'll balance it. When balancing it, I'll calculate the differential amount in the debit side, which is coming at exactly same amount, 13,500. Can you guys make out? We did nothing but segregated that whole account into two parts. We took some items in one and other items in the below one. From the top one, we transferred the balance to the below one. Then we calculated the differences again. So the net income is ultimately same only. Any doubt in that concept?
Can you please repeat that? Can you please repeat the last?
So what we did was, if you remember, our statement looked something like this. So here we had all the incomes in one side, we had all the expenses in the other side, and we calculated the net income. Now what we are doing is we are segregating this statement into two different accounts, just segregating. On the bottom, middle of it, we are drawing a line, that's all. So what we did was we changed the name to trading and profit and loss account. We then drew line in between. Then what we did was we balanced this account first, then found out what is the balance coming in the debit side because credit side is higher. We named it as gross profit. We transferred that gross profit to the other side, which is by gross profit. Then we assigned the same amount. Then what we did was for this amount, this account, the lower account, what we did was we balanced again because the amounts are changed. So we balanced again. We saw the credit side is higher and we put the that higher amount in both the sides. We calculated the balancing figure, and we observed that it is coming exactly the same amount as it was in the earlier when we didn't do the segregation of the whole statement. The meaning thereby, what happened was, what we did, we segregated the whole statement into two. I would say top half or lower half. In the top half, we did the balancing. We found out a balance. We transferred that balance to the lower half and did the balancing in that as well. And we found out the exactly same amount of net income. My purpose is, can you see that there is no difference between doing it the first way or the last way? Can you guys see that? Because we are doing the exactly same thing. It's just a mathematics thing happening. So what we're doing is 200,000 minus 185,000 comes to 150,000. Then we are taking the 15,000 here. Then we are deducting the 1,500 and calculating the 13,500. Earlier, what we did was we deducted everything from 200,000. 200,000 minus 185 minus 1,500, which is coming to the 13,500 only. Do you see how there is no difference only? We are just segregating that statement into two different parts.
Yes.
Please, any doubts you can ask us. I can repeat the whole process, no problem.
Dheeraj.
Any doubts in this?
Yeah, Dheeraj, we made it into two columns. Okay.
Yeah.
The first one is because only it's purchases and sales, and the other one are like extra expenses. Because of that, or just randomly, or how is it?
Okay. The reason I'll come to, reason I haven't yet told. The reason I'll tell you a little bit after. I'll answer your question. You're actually right. I'll just tweak it a little bit more.
Okay.
You're actually right. Yeah. Any other doubt, guys? But
what is the purpose of doing this? Yeah. Is there a question which will be asked like this?
I'll come to that now. Because no one else is having any question, let me come to that, which I wanted to. I'll answer both of your questions in like this. So the purpose of this is, a lot of times we will have a manufacturing organization, and in manufacturing organization, what happens is, suppose our whatever we are purchasing and then processing, then getting the final product, then selling, all of that activity is actually going really good. Suppose, for example, I'm producing the pen. Suppose I got the plastic material, I got the machinery which are required to do the manufacture the pen. I manufactured pen. Then there were some laborers working in my factory. I paid them the amount. Then I sold the pen. So out of this activity, I'm actually earning a good amount of money. Suppose in my example, assume that you are earning good amount of money. Then in order to run a company, you will need the accounts department. You will need the admin department. You will need the HR department. Then you will need advertisement, marketing department, like I said, and other stuff as well. Suppose for that we have a head office separate from the factory. Just think about this as an example. In that office, you have a number of employees. They have their daily expenses. Other expenses are also there. Marketing expenses there. You are doing too much of advertisement, so making sure that your product is reaching out to that point of sale. Now, suppose even if you are making a lot of profit out of the factory, from the factory point of view, you're actually making a loss because you are making a lot of expenses in my example. I'm just assuming everything. You are making a loss because you are making a lot of expenses in the office. Was that clear, my example? I'll come to the conclusion. Was that clear?
Yes.
So it's very basic. There is a factory, there is an office. In the factory, all the laborers you are paying, your machinery is there, electricity charges you are paying. So in there you are making profit. However, because of the office, there are a lot of other expenses are coming in, and because of that, the whole company is making a loss. Now that I have told you this concept, wouldn't you, as a director, as a managing director, wouldn't you want to know, what is the profit that I'm actually making from the factory all alone, and what are the other expenses getting added because of the office? You'd like to know, right?
Yes.
Yeah.
So that's exactly what we are doing here. So all the expenses which are directly related to, or I'll repeat that, all the expenses and incomes that are directly related to the product, those are taken in the first part of the trading and profit and loss account, which is called trading account. There you can get to know, forget about marketing, forget about all the other activities, sales activities. What is my product really earning out of the manufacturing division? Then you bring in all the other expenses which are related to your office, which are not directly related to the product, Those you are bringing in the profit and loss side, which is your lower half. Then you are calculating the net income. Does that answer both of your question? I think the purpose also you understood, right?
Yes.
Yes, yes.
But this profit and loss account without trading, if we are doing, we'll get the net income, right?
Yes,
We'll
yes,
not
yes,
get
you will
the
get it.
yeah. So why is it called profit and loss account? We'll only get the income, no?
Because net income is nothing but net profit, and if it is a case of loss, the net loss is nothing but profit and loss. I mean loss only, net loss only. So it is a profit and loss, right?
I'm still confused. But doing trading account only, we determine the profit. By doing profit
No,
and
no,
loss,
no. So let me
but
change the name. If it is confusing you, let me change the name. So this is net profit. And had the debit side would have been higher and credit side would have been lower, this would have been by net loss. The income is just another name for profit. That's why I was using it.
okay. So by using the trading account only, we found out the profit. But if
No.
we
Tell the full name. What is the profit? Gross profit.
gross
Right?
profit, yeah.
Dheeraj,
Okay,
Then you will
gross
found
profit
yes.
and net profit, is it?
Yes. That's why I'll come to that.
Okay.
I'll come to that name difference. Somebody
Yeah.
else. Yes.
Dheeraj, now when you say profit and loss account, that means the whole company, right? The entire company. But when you say
Yes.
trading profit and loss, it also shows how much you make out of the product.
Yes.
Oh, okay.
Then also the whole
Yeah.
income as well.
Okay.
For the whole company, yes.
Oh.
So to focus a little bit more on what she said, gross profit, net profit, I wanted to cover that because she now pointed out very rightly. So now what we are going to discuss is, now that I have already told trading account is for the product, for the factory. So whatever income that you make out of the factory is called gross profit. That is the name given to it. Now I'll introduce something that was discussed in the ratio analysis class. Sir actually told the gross profit is equal to net sales minus cost of goods sold. Can you guys remember that? I mean, don't remember the whole concept, whole formula. I don't think you will remember the formula. At least something similar, something like this we discussed, isn't it? In the ratio analysis class. Fine, if you don't remember, that's not a problem.
Yes.
I just wanted to relate that. So this is a concept. So we deal with it. So the trading account gives us the gross profit, which is nothing but the profit that you make from the factory. So when I say factory, remember this, whenever I'm saying factory, the language you should use is all the incomes and expenses which are directly related to the product. Now you can very quickly relate why I'm saying directly, right? Because office expenses are not directly related to the product. Does that make sense?
Makes sense.
Yeah, awesome. Now, in the net profit, you are considering everything. In the net profit, you are considering everything. So it will be safe to say that in the trading account, all the directly related expenses and incomes comes in, and in the profit and loss account, those which are not directly related expenses and incomes comes in. Now, how to determine which ones are directly related, which ones are not directly related, because we will get the trial balance, then we will have to determine that when we will go to the other section where I'll actually talk from the question point of view. What will be the question, how to answer it, there only I'll cover. In which I'll also cover the fact that how to determine which one is a debit balance, which one is a credit balance, because like you remember in this question which we practiced in the class, it was actually not given whether it is a debit balance or credit balance. Just like that, they have given all the items together, jumbled all the items together of the trial balance. We will have to determine whether it is a debit balance or credit balance when we were preparing the balance sheet and profit and loss account. I'll cover that afterwards. But I think trading and profit and loss account is very much clear to you, right?
Yes.
Yes.
Yeah. And now let's very quickly come to the balance sheet. I'll introduce it. We have already reached the time, maybe 10 minutes more. We'll see how much we can cover in the balance sheet. Then we will wind up. In the next time,
Dheeraj,
I'll
could
move
you
on.
please
Yes.
put the cursor right? I just wanted to write down those rules.
Sure.
trading account and
Absolutely.
profit.
Absolutely. Yes.
Dheeraj, with this now final accounts is done, no?
No. So balance sheet is pending. Then so the how to answer the question, I'll go there.
Okay.
So this part is very important also. Introduce adjustments. Once I go to the question, before question also I want to introduce that. So the first time we met, I think some of us were there when I told like if something is given in the trial balance, the entry for that is already done. Something that is given in the adjustments entry for that is not yet done. Some people can relate because we had discussed. I have not yet covered that yet. I'm still going through the basics. What are the trial balance? What is the income statement? What is the balance sheet? But then we will go to the adjustments. Then we will do that question. Before the question, I want to cover whether how to determine which account is debit, which account is credit, then how to determine which account will go to the trading account, which account will go to the profit and loss account. And then we will do a question, then we will finalize the final accounts. So maybe 2 more sessions like this. I think it should be enough. I feel like. Okay, if nobody has any other question, I'll move quickly to the balance sheet. Awesome.
Yeah.
Dhiraja, final accounts means it starts from the trial balance, right?
Yes, you're right.
Okay. Final accounts in the sense we'll be given trial balance and from there we have to pick it up.
Yes, you're right. Absolutely right. So we are having a balance sheet which has 2 different sides. Again, I'm not maintaining the accounts properly, the format properly, because all of this is a rough work. We will, when you are practicing, please do practice in a proper format because you will have to remember that. Let's quickly come to the trial balance. It'll be over because I've already introduced all the concepts. If you guys remember, I had mentioned here, balance sheet, all the personal and real accounts comes in. In balance sheet, assets will be the debit balance ones and liability will be the credit balance ones. I'll repeat once again. In balance sheet, personal and real accounts will come, and in balance sheet, assets will be the debit balance ones and the liability will be the credit balance ones. Now that we have determined that, let's come here. Here we have cash as the first item. Is it a real account? Yes. It will come in the balance sheet. Yes. Is it a debit balance or a credit balance? Debit balance. That means it is a debit balance is
Asset.
an asset, right? Yeah. So debit balance is an asset. So I'm putting that in the asset side. So cash. Let's come to the next one, which is a personal account, capital. So, and it has a credit balance. So if it has a credit balance, then it is a
Liability.
awesome. I'll put it in the liability side. You can see very simply we are doing it because we have already introduced a lot of concepts before this. I'll put the balance of it here. Let's go to the next item. Next item is purchases. Even though that is real, we have actually already covered it in trading and profit and loss account. So we are not going to cover that anymore. Yeah, make sense?
Yes.
Awesome. Mr. Abdul is a personal account. He'll come in the balance sheet. He has a credit balance. So is it a liability? Is it asset?
Liability.
Awesome. Mr. Abdul, I'll say. And the amount is 135. Let's come to next item, freight charges, nominal account. We have already taken this to the trading and profit and loss account as because it is nominal account and the nominal account does not come in the balance sheet. So we are skipping that. Let's come to the computer. It is a real account. It will come in the balance sheet. Now it has a debit balance. Debit balance will come as a
Asset.
Asset.
awesome. Which amount is 35,500. Let's come to the next account, Ram's account. Ram's account is a personal account. It will come in the balance sheet. Is it a debit balance or credit balance? Debit balance. It will come in as asset or liability.
Assets.
Awesome. Now the amount is. My question now to you is this: are we missing something?
The profit, the net income, are we going to pull here?
Yes, exactly. Net profit will be put in the asset side or liability side. Then my next question.
Asset side.
Liability side.
Now, why liability side? Can you repeat so that she can understand?
Yeah, if
Something-
profit goes out of the company.
We owe the company.
We owe to the owners, no?
Yes, so that is a liability. Did you get that point?
Okay.
Awesome. So net profit is always a liability. Net loss is always asset. Reason being, net profit, we will owe that to the owner. Net loss reduces the amount of the owing that we had to the owner. It's simple as that. So I'm putting it as a net profit, which is 13,500. Now that we have already put everything, let's add all of this together. Do you see it matches properly? Assets and liability side, which should always match. If it is not matching, then you are making some mistake. We have already prepared the balance sheet very quickly. So what we did very quick. Sorry?
Profit in profit and loss account trading, we have written gross profit in the debit side.
Yeah.
And in balance sheet, we are writing in the liability side.
Yeah.
So debit entries are coming into asset sides. So here we are mentioning in the liability side.
Not necessarily that debit balances are coming to the asset side, I would say. In fact, if you are actually connecting the debit balance or credit balance, let me ask you, this account, if I think about it as a ledger, it's actually not a ledger, but let's assume that this is a ledger. Which one? Trading and profit and loss account. Which balance does it have?
Debit side.
Debit balance or credit balance?
Debit balance to gross profit mentioned 15,000.
No, credit side.
Yes, credit side is higher, no? Credit side is higher. Credit side was higher in this place also. Credit side was higher in this place also, isn't it?
Yeah.
So it's a credit balance only. So if we think from that logic in which you are actually talking, it's actually credit balance and it's rightly coming to the liability side. So as I have told, we had that concept here. Yes, you are actually referring to that also. So liabilities always has the credit balances. So credit balance of the real and personal account always goes to the trade liability. You can also think from that perspective, or you can think from this perspective also that net profit means the company owes the money to the owner. That means that will always go to the liability side. Yeah.
Yeah, right.
So, any other question on this? Okay, I'll quickly read.
No.
Yeah, go ahead.
Regarding the RAM one, so RAM owes us money, right?
Yes.
Yeah.
50,000 RAM owes us. Yeah. Yes. Cool. Because he owes us, that's an asset for us. Yes. So if you can see in the whole process, we have very nicely, told the stakeholders of our company, how much of asset do we have? We have a cash of this much. We have told the computer we have of this much. And there is a debtor that we have named Ram who has to pay us 50,000. And we have also told them that, we have a liability also on the other side to because of which we have to pay Mr. Abdul 135,000. And to the owners you are seeing, you invested for 400,000 with us. Now you have 13,500 because we made a profit during the year. Now, very quick recap of what we did today. We had already covered till how to determine what are the items in the trial balance, whether it will be a real account, personal account, or a nominal account. Now we had already covered whether how expense and asset are similar and income and liability are similar. What we did today was we focused a little bit more on asset, liability, expense, and income. As we have already determined, expense is something which is expense for your business. Like we gave that example of the restaurant. For them, the food that they're purchasing, the material they're purchasing, the salary that they're paying to the chef or other employees, that is the expense for them. Income is nothing but the bill that they're issuing to the customers when they're buying food from them. That's the income for them. I also told, bank interest is also an income for them. And the meaning of expense and income is something like when the amount that you are receiving, you are consuming in 1 year, then that's an income. When the amount you are paying, you are actually getting the benefit out of that in 1 year, then that's an expense. We give the example of, freshener, room freshener in the last session. Because the room freshener will be consumed in 1 year, so that's an actually expense, not an asset. Then we segregated between asset and liability. Very quickly, I told, if we own something, then that's an asset. If we owe something to other, then that's a liability. Very quickly, we can determine if something, a nominal account is a debit balance, then that's an expense. If nominal account is a credit balance, that's an income. If the real or personal account is a debit balance, that's an asset. If a real or personal account is a credit balance, that's a liability. Once we have determined whether all of that, and we have already allotted what type of account each of the items of the trial balance are, then what we did was we created the trading and profit and loss account. We put all the incomes in the credit side, all the expenses in the debit side. As we already know, the nominal accounts will be the expenses or losses. We determine whether that is a debit balance. If it is a debit balance, it will come in the debit side, that is the expense side. If it is a credit balance, here like the sales, then that's an income that will come in the income side, that is the credit side. Then we calculated the net profit. Post which, what we did was we segregated the statement into two different parts. One part representing the factory expenses, factory incomes. So how much of income are we actually making out of the direct incomes, direct expenses? And we segregated that and called it as a separate name called trading account. So the trading account gives us the gross profit, which means how much of profit we are actually making from the factory. It's a very simple one. Or you can say how much of profit we are making from the direct incomes and direct expenses. And I connected that to the ratio analysis chapter when sir told, net sales minus the cost of goods sold gives us the gross profit. Now we take that gross profit to the another lower half, which we called profit and loss account. So this is the trading account and this is the profit and loss account. All the indirect expenses we put here, we have already put, we're just segregating that now. Now that we have done that, we will calculate the net profit out of it. Then we also connected the fact that in the net profit will go to the liability side because we owe that money to the owners. Quickly we went to the balance sheet. In the balance sheet, what we did, we put two sides, liability side and asset side. And as I have already told, assets are the real or personal accounts which have a debit balance. Liabilities are the real or personal accounts which have the credit balance. We quickly went to the trial balance, found all the accounts, whichever has the debit balance, personal or real account, we put them as asset. All the real or personal account have a credit balance, we put them as a liability. Then finally, one thing that was missing was the net profit. Never forget that. We always tend to forget that. Even I forget that as of today. Because that has to be picked from a separate account, so we normally forget to do that. So once we have put that, then we balance both the sides. It should always be same. If it is not same, we have made a mistake in the question. That's the end of it. Next time, like I said, I'll go to these two parts. If the trial balance is given as a base without specifying whether something is debit or credit, I'll cover that. And today I found out something else that I'll have to cover is whether something will go to trading account and whether something will go to the profit and loss account. I'll also cover that. Then we will go to the adjustments, how the adjustments are, why those are, what to do when they are. Once we are done with that, then we will go to practice the question. Any doubts, guys? Within 1 minute, this will get over. Any doubts? Otherwise, we'll wind up.
No.
So what exactly do you mean by adjustment, Dheeraj?
I'll come to that. We'll cover it in the next time.
Sure,
Yeah?
sure.
Till yet, I think everything is clear. We should revise these things and recall it, or like memorize.
Do
we have
practice.
to
Yes.
do it.
Yes. Do revise. Do practice. Come to me with a doubt. If you are not coming with a doubt, I already know that you are not practicing. Because if you practice, definitely you will have doubt.
Right. Then